Here are two prime examples on how a moving average and a trend line can work very differently and give off different indications, giving off a false signal on when to sell or when to buy. Here's an example right here. So we're looking at the euro and the Great British pound. This red line right here is the trend line. So we got 1-2 touches, so that lets us know this is a good trend line right here. So boom, it hit, it goes down. Boom, it hit, it goes down. And then more, 3, 4, hit, down, hit, down. But now let's look at this 200 moving average right here. It's all over the place. It only respected the 200 moving average twice, but after that, it's all over the place. All over it. And this is the daily time frame. So all these candles represent 1 day worth of time. So boom, it's been over it for however many days. Over it for however many days. Over it. You see? And now let's give an example of the moving average being respected, but not the trend line. Or a trend line actually not even being able to be made. So here goes the same thing. The 200 moving average. Touch the 200. Touch the 200. Even basically over here too. Touch the 200. Touch the 200. Touch the 200. Respecting the 200. But look at how it is. You can't even make a trend line. You can't even make a proper trend line. You see what I'm saying? The trend line's too straight. Can't do it. And then let's try to make another one. Try to make one from right here. Boom. Can't really do it. We got 1 touch, 2 touch, way past it. This one touched it. This one went a bit past it, so it's fairly right. But look at that. This isn't a proper trend line. You see what I'm saying? So those are 2 examples on how a trend line works and how a moving average can work. One can be respected, one may not even be able to even be made.